Hey everybody, Tony here with the third lesson for the week of June 20th. For this lesson, it was requested that I talk a little bit more about liquidity grabs and what I look for in how to differentiate a liquidity grab or a break of a key area such as supply or demand. And how to differentiate between the two and how to not get faked out by liquidity grabs. So going to be a pretty short lesson, but want to talk about some key things that I personally look for during when trying to differentiate a potential breakout, breakdown, or liquidity grab. So if we look at this Apple 10-minute chart, you can see from last week, the 17th of June, supply was formed here at 950. So I extend my supply zone. Demand was formed here right into market open around 920 into 930. So why is this important? Well, it's important because I have my demand and supply zones both set. Now, where might have some people ran into trouble with potential liquidity grabs here, maybe they got stopped out or lost some money, got faked out. If we look at this candle at 1120 and this 10-minute at 1130, you can see we push into supply, okay? This 10-minute candle at 1120 closes near the top of our supply zone, and this following candle at 1130 pushes through supply. Now, I have this highlighted. This is a textbook liquidity grab, and this may have, got some people. People may have went long out of supply as soon as they saw this candle make a move out of the zone. Something I like to do and something I always talk about is, one, you must, in my opinion, wait for confirmation on one of your higher time frames, such as the 10 or 15. If you would have waited here to wait to see if this 10-minute candle at 1130 closed out of this zone before you went long, you would have seen that, okay, in fact, not only does it close back in the zone, but it also closes under that 200 EMA, and we know by now that that's an extremely strong resistance and support area. So those would have been two indications to not go long just yet. You never got confirmation, a close out of the zone. Ended up closing underneath that 200 EMA. Another thing that I always talk about is waiting for the retest. So a close out of the zone and then a retest, and then movement with back out of that zone. That's when ideally I like to enter. You can see though, however, here at 1 o'clock into 1:10, we do get that close out of that zone. We do get a back test, and this candle closes out of the zone again. What happens then? We wick through up past 133, and immediately it gets smacked back down. Now, this may have just been one of those things where, we were at the mercy of the market. This may have been a potential good entry. You get confirmation. You get a back test. What I think happened is they ran this through 133. That key psych level, and grabbed liquidity and smacked it back down. That's another thing I like to look for, guys. If I'm trying to go long out of supply, do I have a key psych level ahead? If I do, I'm absolutely at all times marking that level and then in turn waiting for that key psych level to be broken before I go long. We all know by now that psych levels act as support and resistance, especially in this current market where the only underlying support we have on almost everything are psych levels. So I think that's what happened here. We get a close out of our zone, looks great. We get a back test, move out. They simply, I think, just grab the liquidity through 133 and smack it back down. We do have another liquidity grab here through this swing low at near 131. They drop this almost down to 131 to a T, run it back up into supply, and then it consolidates into the end of the day. So for me, the key things to look for when trying to identify, okay, is this going to be a liquidity grab, or is this going to be a sustained move? One, absolutely, you must wait for confirmation, either out of a zone, out of supply, or through demand, vice versa. And two, something that's really going to help you is wait for that back test entry. That's going to not only are you going to be taking lower risk entries, but you're going to be getting that confirmation you need that, okay, this is in fact supply flip demand or demand flip supply. So you need confirmation out of the zone, and ideally you want to wait for a back test. And the third thing, know where those psych levels are. You see it time and time again where they will grab liquidity through a key psych level, and then move it in the opposite direction. They collect that liquidity, and that's what they were aiming for. So confirmation, back test entries, guys, and know where your psych levels are. Those are really going to help you with not getting faked out by these liquidity grabs, because they're done on purpose, and they're done to get you out of your positions. And they can hurt a lot of people. They can if you're not managing risk and not careful, they can really blow up an account. So these are the things and the tools I use, guys. As always, I hope this lesson helped. This was a really great example on Apple. Try to utilize these things this week, and if you have any questions, please reach out to me, guys. Thank you.